allow me to welcome you all to the July 2019 edition of the Botswana Stock Exchange opening bell ceremony, which has been appropriately themed the importance of the bond market and capital market. However, before we begin proceedings, please allow me to observe protocol by acknowledging the presence of the following: the Botswana Stock Exchange Chief Executive Officer, Mr. Thapelo Tseole, fellow Speaker and Vice Chairperson of the Botswana Bond Market Association, who is also the Head of Investor Relations at Lesego Holdings Limited, Mr. Boikanyo Khosidintsi. We have, of course, the fellow Speaker, who's also the Director of Rand Metric Bank Botswana, Ms. Ulibile Makupe. I think she will join us shortly. She just arrived. And then, of course, I'd like to acknowledge the members of the Botswana Bond Market Association and fellow speakers. Managing Director of Allan Gray Botswana, Ms. Phatsimo Ncube. We also have, of course, Managing Partner of Khan Corporate Law, Ms. Shakila Khan. We also have a fellow presenter, the Secretary General of the Botswana Bond Market Association and Head of Product Development at the Botswana Stock Exchange, Mr. Kopano Bolokwe. We also have, of course, the BSC Head of Market Development, which is Ms. Thapelo Moribame. We also have another member of BSC Management, Mr. Tsametse Molai, who's the Head of Listings and Trading. I'd also like to take this opportunity to acknowledge the rest of BSC Management and staff, as well as our key stakeholders within the ecosystem of capital market. Kindly also allow me to acknowledge the business community here present, members of the media, members of the public. Good morning. Good morning. Yes, as you do know, the opening bell ceremony is time sensitive. So at this point in time, kindly allow me the honor of calling to the podium. The BSC Chief Executive Officer, Mr. Thapelo Tseole.
Vice Chairperson of Botswana Bond Market Association, Mr. Boikanyo Khosidintsi, also a former employee of Botswana Stock Exchange many years ago. It doesn't exist anymore, sir. We are now Botswana Stock Exchange Limited. I hear the chairperson is not feeling well, Miss Lorato Morule. I know it's flu season. Speakers, Director R&B Botswana, Ms. Ulibile Makupe, Managing Director Allan Gray, Ms. Phatsimo Ncube. I see a lot nowadays. Managing Partner Khan Corporate Law, Ms. Shakila Khan, Portfolio Manager at Investec, Dr. Pako Tubahale, my former boss at Bank of Botswana. Where is he? BSC staff, management. I see a lot of asset managers here. Borre Lemo. I know it's your first time to come to here. I mean, it's your first time to come here since, but we are only on the 6th floor. Mr. Sileboho, one of the greatest financial markets participants of our times, now retired. We welcome you to the July opening bell. Ladies and gentlemen, let me take this opportunity to welcome you and Dumedise Ompenu Dumelang. The July 2019 opening bell, it's a recognition of the contribution of the bond market to the capital markets in Botswana, and therefore, as the exchange, we have seen it fitting to recognize the importance of the bond market and capital markets. Hence, we invited most of the participants who play a role in this sector to do the honor of ringing the bell this month. Following the conference, bond market conference, which was held in June 2019, themed strengthening the bond market to support the physicals and the private sector development, which I think was very successful, very interesting debates, because I think I attended the whole day, and there were a lot of takeaways from various speakers from all across sectors. And let me take the opportunity to congratulate the hosts, the committee, or the association for such a successful conference. We have seen an increase in market activity at the BSE when majority of our peers are going south. We have traded, I think, up to June 870 million, and this put us at an average of about 7 million pula per day compared to 5.5 million pula per day. So this is an increase of about slightly more than 20%. Those who like to ridicule against the JSE, you might be happy to learn that in terms of their trading volumes and values, they are 39% down. So I think we'll enjoy the limelight for the time being. Corporate bonds, I think we have seen a lot of activity in the past 2 years in terms of the corporate bonds. The total trade in terms of government corporate bonds is about 500 million. And then government bonds is 500 million. Corporate bonds is 22.9 million. This is far much better than the figures we're used to 3 years ago, and therefore I think that's why I'm so optimistic that the efforts in this regard to develop this market are bearing fruit. More especially that the SADC stock exchanges under the leadership of BSE managed to successfully convince the governors and the SADC finance ministers to accept our model of trading, a hybrid model which is much more towards central trading of bonds. We have been lobbying for about more than 3 years, but I think last year the SADC ministers of finance agreed to our proposal, and therefore we have got a matrix that tracks where each of the 14 or 13 markets are as at June 2019 to show the level of development. And I'm happy to state that I think even in Botswana we are making progress, especially with the improvement in the levels of and the types of systems that we have. The Bond Market Association, although its secretariat is at the BSE, was established in 2013, registered with Register of Societies, and I think it's one of the most efficient associations in this country, and it's really pioneering a lot of development in the bond market, which is something that we welcome at the BSE. Because we don't want to be the only people advocating for the development of the market. We want other market participants also to help us to grow the market. And therefore we are happy to host you today and honored to have you ring the bell. There are a lot of developments coming up, of course, at the BSE. As you might know, or as you might be aware, we are hosting the Africa Association of African Stock Exchanges, ASIA conference in Kasane in November. Moana, I think by now is fully booked. So those of you who want to attend, you need to book in advance. We're expecting 500 delegates at the conference, and as usual, we are going to pull up a good conference as the BSE, because this is our first ever hosting as Botswana. The ASEA conference is the largest financial market conference in Africa, and it will be nice to have a lot of locals, participants there from our capital markets. And I'll encourage you to book and register as early as possible, because I think people started booking as early as January this year. With all those few welcome remarks, ladies and gentlemen, thanks for attending the July 2019 opening bell, and we welcome you, and especially our Bond Market Association. Thank you.
Thank you very much for those warm welcome remarks, Mr. Tole. At this point in time, we shall continue the conversation, and we have the honor and the privilege of having a presentation delivered by the BSC Head of Product Development, Rakopano Bolokwe, who will be giving a comprehensive status of the Botswana bond market.
My presentation basically intends to set the tone for the upcoming panel discussion. So it's going to be very short with a few issues that possibly some of the speakers would expound on in the panel discussion. Normally, halfway through the presentation, if you speak about bond markets, people will stop and ask you, what is a bond? What are you talking about? So what we did as the Botswana Bond Market Association is that we put together a publication, as you'd see, the cover page and the contents there on the slide. And it's quite comprehensive. It outlines the end-to-end operations of the Botswana bond market. So it's a very good publication for learners and also for professionals and practitioners to get a good grasp of what the Botswana bond market is, where it started, and some of the initiatives which are being undertaken, as well as their successes. So a bond is basically a loan agreement where an institution would go into the market to raise funding from the public and enter into an agreement that through this instrument that I'm issuing, that I'll call a bond, you'd give me so much money, say 10 million pula, for a period of 5 years. And 2 times every year, I'll pay you payment interest of, say, maybe 5%. Then at the end of the 5-year period, you get back your 10 million pula. So that explains what a bond is. But much of the details, like I've said, is entailed in that publication that we encourage you to download from the BSC website as well as the Botswana Bond Market Association website. Of course, we are also available to provide explanations and more learnings as required. So what you see there is a depiction of the evolution of the Botswana bond market, particularly for the past 5 years. And I'm just showing this to indicate the immense growth that we continue to experience year on year. If you look at the number of bonds which are listed, if you look at the size of the bond market, and just the weight of the bond market relative to our economy or market cap to GDP, and also the increasing turnover levels. At the end of last year, we closed with 49 bonds. And this year, we are sitting at 46 bonds. Some bonds have been redeemed as per the loan agreements, and we added two new bonds. But it's still a good achievement in the sense that even if we don't get any more bonds this year, we'll still be one instrument ahead of the strategy, which says that by the end of this year, we should be having about 45 bonds. And if you look at where we are going in our 5-year strategy, by 2021, we want to have 50 bonds. And as we speak, we're at 46. I think with the awareness that we are putting out through the conferences and through this kind of forum, we will continue to see increased appetite and increased issuances in the bond market. What is also of interest is the private sector participation in the bond market. If you look at the market capitalization, corporates account for 5.4 billion pula of the 15 billion as at last year. It's still around the same level because the market cap this year is sitting at 15.8 billion pula. So this is quite essential in the sense that initially you want the government to set the tone for the development of the bond market, by issuing bonds of different maturities, different sizes, so that the private sector can use the established benchmark by government to try and issue and raise capital for business expansion, which ultimately creates employment. But it is not satisfactory, especially for a country like ours. If you look at the research from the IMF, they are opining that for a market to be optimally developed, you need government issuances to be around 15% of GDP, at times between 15 and 25% of GDP. And if you go into Africa, markets like Namibia are sitting at 16.8% of GDP, Mauritius 30% of GDP, South Africa 40.5% of GDP. Elsewhere in the world, Singapore, Denmark, Norway, they're also around those optimal levels of around 25% of GDP. So we are still lobbying government to increase its participation in the bond market, primarily to set and establish a reliable benchmark on which the private sector can price the issuances. Last year was a historic moment for us. That section called turnover, we recorded total of 2.2 billion pula. That's the value of bonds we traded last year. This was the highest amount ever recorded on the BSE, and it was far ahead of the equity traded volumes in that particular year, 2018. So equity turnover 2018 amounted to 1.8 billion pula versus that 2.2 billion pula from the bond market. I think it just shows that in terms of the proposal that the CEO alluded to, there's a lot more potential to unlock if you put together that hybrid model where much of the trading would happen on the exchange. Unfortunately, this 2.2 billion, majority of it was happening outside of the exchange through the primary dealership market who trade government securities. There are a lot of participants in the market representing various sectors of the economy. And you'd see from that slide that we have parastatals who are very active. We have private sector entities who are very, very active. In total, at this point in time, we have 18 different issuers on the bond market. So in other words, of those 46 bonds have been issued by 18 different entities representing just over 7 sectors. I just want to give the comfort primarily to parastatals and the private sector. Some of the companies in the category that you refer to as SMEs are very, very active in the bond market. The likes of GetBucks, that has issued about 15 million pula, and that is currently the lowest amount in issuance by any entity. Lesego, which is a multinational by now, has issued as little as 25 million pula in very large amounts over and above that. So the bond market is open to everyone. We're trying to promote inclusiveness, and we're working very hard to get SMEs to play a bigger role in this particular space to finance their business expansions. And 2017 was also a historic moment for the exchange, because that was the time that we had our first ever supranational issuance. That is an issuance by an institution, finance institution, that is rated higher than government in terms of credit worthiness. And that was the International Finance Corporation when it issued 260 million pula in 2017. Also, we had our first ever Euro bond, which is a US dollar denominated bond, which was issued by Investec also in 2017. I think the essence of these two issuances, IFC and Investec. IFC is normally critical when it plays a role in domestic bond markets, because if it does issue, like it did in Botswana, it sends a very good signal to international investors about the credibility of our market from a regulatory standpoint and from infrastructure and operational standpoint, trading, clearing and settlement. And if you look at the Investec issuance, which was around 113 million US dollars, translating to about 1.2 billion pula. It is actually the highest issuance by any private sector company here in Botswana. And it was subscribed to by international investors, also signaling the kind of confidence that the foreign market has on the development of our domestic bond market. So retailers, very, very active in our market. Micro lenders, very, very active in our market, and the banks in particular. Parastatals continue to play, a meaningful role, which is why at the previous conference we really put a focus on why we need parastatals to come and participate in the bond market, primarily to reduce the burden of financing from government. But our observation is that over the past 10 years, if you look at 2008, parastatals were accounting for about 25% of market cap, and it has declined to about 12% of market capitalization. So we still have a lot more work to do. The likes of Botswana Railways have a lot of projects that require a lot of money, and we really want to see this capital being raised here in Botswana on the stock exchange instead of in other jurisdictions. So I've put there a table that shows some of the amounts that have been raised as examples, not to say these are exhaustive, just to give an indication of the scope and the potential and the capacity to raise substantial amounts of money for business expansion. We want private sector companies, parastatals, to ride on the strengths of their balance sheet to access capital. We want parastatals to wean themselves of government subvention and restructure their balance sheets to access the abundant funding that is provided by the pension funds locally. Currently, the way the market is structured, especially from a trading aspect, is that government securities are traded on the primary dealership system, which comprises of commercial banks and is overseen by Bank of Botswana. So trading and settlement of government bonds is done by banks and is conducted by Bank of Botswana, whereas corporate bonds are traded here on the exchange and they settle through the CSD. So in other words, we have a situation where the market is fragmented, and this kind of arrangement brings up a lot of challenges. When you have a market that is fragmented, information does not flow easily. What investors want is the ease of access to information, and the information has to be fast and has to be real time. Prices are not easy to access. Even the prices that ultimately form do not reflect the true prices of securities. And when you have a setup where you have two platforms for trading and for clearing and settlement, it ends up in higher transaction costs for investors, among other things. So you've just heard about the proposal to promote the centralization of trading and settlement in stock exchanges across Africa. That is something that we are pursuing quite aggressively with our stakeholders being NBFIRA, Bank of Botswana, as well as the market participants. And it comes with a lot of benefits, because when trading happens on the exchange, information is real time. We're able to utilize the excess capacity of our state-of-the-art clearing and trading systems. We are able to guarantee greater security, safety and custody of assets which have been traded, because some these assets would be dematerialized from paper. And international investors like a situation where they are trading through systems, be it trading or settlement systems, which comply with international standards as well as international best practices. You know that our CSD system, for example, is very, very compliant with IOSCO principles and has been rated by Thomas Murray, which rates clearance systems across the world. So that's the direction we want to take in terms of moving our market forward, in order to, by way of defragmenting and just improving efficiencies of trading as well as clearing and settlement. This is my last slide, and it is quite befitting because it speaks to some of the innovations that we have done at the BSC. When you manage investment portfolios, you cannot do that without a benchmark. It is very, very critical. But a benchmark is a benchmark. Everybody can come to the market and just give you a benchmark. I think the key interest and the key question is the integrity of that particular benchmark, which you are using to measure your your portfolio management. So a benchmark has to be very, very meaningful and very, very useful. From a governance point of view, you want a benchmark which has oversight. As you'd see in the benchmark that we have here, that there's an advisory committee that oversees the management of the bond index, which is the benchmark that we introduced. The benchmark has to be audited. It has to be provided by a neutral entity, such as the stock exchange. It has to be transparent. Users have to be able to get access to the methodology that is used to compute that particular benchmark and the conventions. And in most cases, when you introduce such a benchmark, you also want to consult with them, just to make sure that all the dynamics, all the constraints are taken into account. Investors want a benchmark that is very, very accessible. They want a benchmark that they can access across several platforms, locally as well as internationally. So in 2013, we developed this benchmark that measures the aggregate performance of fixed income instruments on the BSC, fixed rate as well as floating rates, which we call the Botswana Bond Index series. And these are some of the credentials of this particular index. I think the key takeaway for the service providers is that you really should be utilizing this index because it takes all the criteria, if you speak of the integrity of a portfolio benchmark index. So we continue to engage with our stakeholders. We continue to engage with trustees, asset managers, asset consultants, as well as NBFIRA, just to get the message across. Especially that at this point in time, this index has been utilized by a few entities, and there's a lot of capacity and scope for this index to be adopted by the entire market. So, Reselebogo, although retired, your interests are still in the market. You have investments in the market. You are spearheading some of the changes on behalf of retired members. So we still want you to engage in this conversation with your societies and with the relevant service providers, just to look at improving the integrity of investment management in Botswana by utilizing this index. So with those remarks, ladies and gentlemen, I have come to the end of my presentation, and I thank you for your attention.
Thank you so much, Raboloko. So at this point in time, I would like the honor of calling to the podium the BBMA members, as well as Reta Pelotole to the podium to officially ring the bell. Are we ready? Is everyone ready? In 3, 2, 1, ring. Did you want to pass it on? You can pass it on to the other members as well. In 3, 2, 1, ring. The last set. Oh, you're good? You're fine? 3, 2, 1, ring. Thank you so much. You may have a seat. All right. I think the moment that we've all been waiting for, as Rakopano did allude to, is the panel discussion. The panel discussion will be on the subject matter, which of course is the importance of the bond market in capital markets in Botswana. So at this point in time, I'd like to call to the podium. The moderator for this session will be the Managing Director of Allan Gray Botswana, Ms. Phatsi Mangcobe. And the panelists for this particular panel discussion will be the Director of Rand Matured Bank Botswana, Ms. Ulibile Makupe. We shall have, of course, the Managing Partner at Khan Corporate Law, Ms. Shakila Khan. We shall have the BSC Head of Listings and Trading, Mr. Tsameti Molai. And then we shall have, of course, the Vice Chairperson of the Botswana Bond Market Association, Mr. Boikanyi Khosidintsi. You may come to the podium.
Right. Good morning, ladies and gentlemen. I take it the introductions have already been done. I am just going to jump straight into it. I've also been reminded that we've got 25 minutes. All right. I'm going to start off with, I'm going to pick on you first. And really, this is, off the back of your experience. We want to know what constitutes a vibrant bond market. I mean, quite often we talk about bringing vibrancy to Botswana. What constitutes a vibrant bond market, and what are the building blocks to get to that?
There are a number of things, I would say. Firstly, you need congruence between monetary policy and fiscal policy. You need regulation that's appropriate for the type of market. But perhaps if I could just expand on monetary policy and fiscal policy. So I think there isn't a huge debate around monetary policy. I think Bank of Botswana has done a stellar job in maintaining price stability. They've kept the inflation rate between 3 and 6%. Interest rates are at a 20-year low in Botswana. Monetary policy, I think there are areas for improvement. And I've spoken previously about things, small things that we could potentially do to improve to improve just the performance and the growth in the bond markets. Specifically withholding tax on interest. I mean, I was looking at the rates across some of our markets. So if you look at Botswana, non-residents are subject to 15% withholding tax on interest. Now, if your interest rates are at a 20-year low, and withholding tax on interest is 15%, it's quite unlikely that anybody who's non-resident will be attracted to put money in this market. That's the first point. The second point is, according to the Ministry of Finance's own debt management strategy 2016 to 2019, government bond issuance is capped at 6% of GDP. Now that's very small. And given that that creates uncertainty around future supply, what typically happens is that those who buy government bonds buy them to hold. And therefore you end up in a situation where you've got an illiquid market, there's no price discovery, and you've got this withholding tax on interest which keeps foreigners outside of the market. And so, for me, alignment between those two. Yes, one accepts that government does not need to borrow at this point in time, but there also is an opportunity cost. So you can't just focus purely on interest expense and say, well, we don't need the money, and if we go out and borrow, this is what it's going to cost the taxpayer. You've got to look at a more broader set of issues, like if I had to borrow, where would I put this money? And we know that Botswana still has huge developmental needs. And by putting that off, in a way, that is the opportunity cost, the trade-off between saying, I don't need to borrow now, and, well, I still have this huge infrastructure development funding backlog. So I think, for me, those are the two key areas that I think we need to engage a lot more on and try to find a way forward.
Sure. Thank you for that. I will come back to you. But before then, I just wanted to speak to Mama Kupe. We've been talking about the subject matter for some time now, the bond market, and, arguably it's probably one of the least, or perceived to be least attractive asset classes, often described as not being sexy. But I want to ask you, why is this important? Why should we be talking about that? And more specifically, how useful is the bond market to corporates? How useful is it to the broad-based economic development? I know you've touched on a few points, but I'd like to hear from you.
Thank you very much. I think, as Re Bolope already alluded to, as well as the presidency, the bond market actually offers corporates an opportunity to raise funding in a much more flexible manner. It is an alternative to the equities market in terms of raising funding. And it also, compared to a traditional loan, which a corporate would actually get from a bank, it offers the issuer the opportunity to access investors that normally wouldn't access. Therefore, they're able to either raise a higher amount than they would actually raise from one investor, and it also facilitates better price discovery. So as a corporate, you're actually able to borrow at a much better rate than you would if you only approved one lender. So it gives diversity to the corporate which issues that particular bond in terms of sources of funding as well as price benefit. And in terms of the investors, the bond market actually gives investors an alternative investment instrument without necessarily being too tied up in an investment such as equity. So there is a maturity date, there is better price transparency. Therefore, as an investor, the bond market gives you an opportunity to invest in an instrument that matures. Therefore, you are able to better match your investment to your requirements.
Thank you. And in your experience as a treasurer, what would you say are your challenges in trading bonds?
Okay, it's been a while since I've been a treasurer, but I think the challenges are still there. And I think most of the issues that we actually experience, especially in the Botswana market, Representative has really alluded to. First of all, the size of the market is very, very small, which basically means issuances are small. Therefore, any issuances that come to market are easily taken up and the investors hold them to maturity. This then means there is no price discovery. And then the lack of participation by outside participants is also a deterrent, because in the bond market, you want people to go into the market as well as to be able to go out in order to facilitate better price discovery. Therefore, if people hold to maturity, then you're not able to adequately assess what the actual price of an instrument is. And the other problem is that we also have a very limited investor base. So you tend to find that if there's an issuance, issuers will go to the same investors all the time. So you don't then get a diversified investor pool. You approach the same investors because of the size of our market. However, if some of the impediments that Ray Kosidizi actually alluded to could be removed, we could then have international investors who will not want to hold a bond to maturity. So the challenge that we currently face is that people look at Botswana bond and compare them with other markets. So they look at relative value. We pride ourselves in our rating and the fact that we, as the Botswana market or as the government, which is the benchmark issuer, the expectation is that the government expects to issue at a very low rate. However, investors are also looking for yield, and they'll compare the benefit that they get from the Botswana market to what they get in a market like South Africa, which has a lot more liquidity, as an example, and offers much better yields without some of the structural deficiencies that we have in this market. Therefore, investors tend to find that it's actually a lot costlier to actually invest in a bond in Botswana than to invest in other markets. So we also have to look at relative value for our investors. And if you look at the government bond as well, we also do what we call a fair value assessment of our bond. It's come a long way, but for quite a long time, the price at which investors actually acquire bonds related to the fair value of that particular bond, there was a mismatch between those prices. It's come down a lot over time, but that has been one of the impediments that we have in the market.
Thank you for that. You touched on very key issues there. One of them, which I actually want to just put it to you, Zamitse, perhaps maybe on a more broader level, from a regulatory standpoint, and as the BSC, is there anything that you could do to, provide a more conducive environment for raising debt finance, as well as for investor participation?
Thank you very much. Good morning, everyone. Well, I think that as the BSC, as the regulator in this market, our key role is really to facilitate the creation of a very fluid market rather than to dictate. A regulator's role really is to, in my view, be the oil that puts together all the different elements rather than somebody that puts out rules out there. Hence, as you would have noticed in terms of our approach, when it comes to rulemaking, in terms of also creating the ability for the markets to be consulted. As you know, the the Bond Market Association itself was founded here through the BSC. Really, that's how we see our role, to really just put together all the different players and make sure that there is discussion, and make sure that where there are problems, we help to find the solution in terms of enabling that communication with the relevant role players. But indeed, in terms of our contribution to this, we have been listening as a regulator. We have listened to the issues of cost, and one of the things that we have done is to create a BSC Register of Advisors, which is in some way, hopefully, will contribute to the issue of cost, in the sense that when you have a greater pool of professionals, because as you know, when it comes to issuing bonds and so forth, you need to have legal advisors, you need to have other kind of arrangers and corporate finance advisors and so forth. So what we, in our thinking, and what we have included in our latest business requirements is to create this list of registered advisors. And the idea is that when you are an issuer, especially looking at the SME corporates that are also looking to play a role in the bond market, they will then be able to go out there and look for good rates, or in terms of professional fees, they won't be charged as high as if there seemed to not to be an alternative. So that's one way that we are looking at. But we have also looked at other issues to prove that we listen again. We have looked at issues of commission structure. For a long time, our commission structure, when it came to bond trading, it was basically outdated. So lately, we have submitted to our regulator proposals in terms of fees, which are looking to reduce the commission as far as bond trading is concerned. Another change that you will see, and you would have seen that is coming to the market, is with respect to programs, bond programs or debt programs. In the past, you could come to the BSC, and in fact, currently, because these rules haven't been approved yet, so you can come to the BSC and set up a program memorandum and get it approved by the BSC. And what we have seen is that corporates would issue and list some bonds, and in some cases would issue bonds and not list them. So we are going to change that in the new rules, and all of these bonds would have to be listed. All bonds which are issued under an approved program would be listed on the BSC, and this again goes towards improving that transparency. Somebody was speaking earlier about the fact that for us to develop the market, we need to have more issuances in the market. So we hope that this will increase the number of instruments and therefore lead to better price discovery as well. And of course, maybe lastly, what I can mention is with respect to what was said earlier by the CEO in terms of creating a hybrid market for the government bonds. And also, that means we hopefully in future will be able to have issuance of retail bonds by the government as well, and that will lead to participation by the general populace as well.
Okay, thank you. Before I move on from you, you mentioned fees around the trading, so the commission thereof. But I wanted you to maybe touch on, the listing requirements as well. But actually, don't go through the listing requirements, but perhaps maybe put some color as to what sort of fees can one expect if they're intending to list a bond. So the initial and the ongoing fee thereof.
Okay, thank you. I'm not checking what's up. I'm just checking the fees here.
Sure.
So we have actually put this up on the website in terms of the fees that are charged for issuances. So as far as listing fees for bonds, you would only pay to the BSC 0.0175% of the total nominal value of the program. So remember earlier I was talking about the program. What happens is you would submit a program, let's say a 500 million program to the BSC for approval, and then you issue notes under that program. So, for example, I believe GetBucks has a 100 million program, and under that program, so far they've issued, I believe, 70 million, state to be corrected, 200 million, sorry. So, from a 500 million program, you can issue notes on a piece-by-piece basis. So, what we will do is we will charge a listing fee on the actual program with a minimum fee of 60,000 pula currently and a maximum fee of 150,000 pula. And this is nothing compared to what the advisors charge. So don't think that is a lot of money. In terms of the annual sustaining fees for corporate bonds is 0.0175% of nominal value of the bonds listed, subject to a minimum of 40,000 and a maximum of 100,000. So again, these numbers are posted up on the website.
Right. Yes. Thank you for that, Shakila. I think you heard that one. So, Shakila, as a legal advisor and an intermediary in the process of, listing, I mean, you heard that point around fees and, the fees thereof as an advisor, right? How would you respond to that, particularly around the perception that, a role as a legal advisor is copy and paste, right? So if you're really to say it's copy and paste, but then why are the fees, relatively high? And please add on to, what I would also want to know is, typically as investors, we tend to think about fees in the absolute and probably not look at the value. What value can you also add, say, around protections for investors, and how can that basically develop or help in emerging markets?
Thank you for that. So the comment on fees is quite interesting, especially in respect to legal advisors as market intermediaries. I will address the role of legal advisors first, and then perhaps talk about some of the other market intermediaries that are also involved and necessary in the bond listing process. As legal advisors, what we do in terms of bond documentation is we are responsible for the disclosure document. And we usually have legal advisors. What is good practice is to have an advisor appointed by the arranging bank. So these are your corporate finance advisors on the bond, and another advisor appointed separately by the issuer. In certain instances, especially in the early days of the market, we used to have one advisor acting for both. Increasingly, what we're seeing is to follow good practice and to have two separate advisors. The role of the issuer's legal counsel is usually to prepare the disclosures that are necessary. So the disclosures are dictated both by the BSE listings requirements and also our Companies Act. This is an area that we can look at in future to see whether the disclosures in the Companies Act are really appropriate for bond documentation, because I think that's an area that definitely does need to be looked at. And perhaps we could streamline the process going forward. In terms of the value that the legal advisor is adding, it is actually quite considerable from an investor protection perspective. We need to make sure that the disclosures have been checked, so it is not just a matter of going to the company and asking for information. It is double checking and verifying every piece of information that the company gives us, so that investors are able to look at the information memorandum and make a fair judgment on the position of the company, not only in terms of the financial information that is disclosed, but in terms of the business operations, major contracts, etc. That support the financial information. So that role is quite important, and it does differ. In terms of costs, we've heard what Smetsi has said about listing costs, and those don't seem to be prohibitive by any means. I think when you look at the number of advisors that are needed, so the most crucial for a bond would be your arranging bank. Your arranging bank, and here perhaps I can ask DK to chip in a little bit, but what we typically see in the market is that they would charge a monthly fee and then a percentage of the overall funds that are raised. And the monthly fee would either be set off against the against what is the percentage that is finally raised, or be in addition. And that's what we've seen in the market. That is by far the largest fee. But they are also doing a significant a job and duty in terms of being able to market the company and do the book build, etc. So I don't know, BK, if you wanted to chip in there on that.
Yeah, sure. I mean, arranging fees are really a function of the size of the issuance. And in markets where you've got much larger issuances, arranging fees can be as low as 10 basis points, 15 basis points. But in this market in particular, we've seen fees as high as 50 basis points for an issuance. And you've got to look at that in the context of, if somebody is a frequent issuer in the market and they issue 10 billion in a year, versus somebody who's going to issue only 500 million, and you're doing the same amount of work, that is what leads to that discrepancy or the difference in the fees that are charged in this market versus, say, South Africa.
So would you say that it's probably the reason why, or the hindrance in our market regards to, say, innovation, why we haven't seen, like if you're looking at, in terms of fixed income products like your infrastructure bonds, retail savings bonds, and there are various other examples, are those perhaps maybe impediments to our innovation? And perhaps maybe if you could just, this is a point that Kopano also mentioned earlier, and perhaps maybe just my last question. He mentioned the government's domestic borrowing, and often this is a topic that, comes up, and that it's not deep and it's not broad enough to significantly develop the local market. So, should we be looking externally, and how efficient is it to borrow offshore versus local? And what's the opportunity cost? I know you touched on it lightly. This is basically open to anyone here. It is just the final question.
It goes back to the point around fiscal policy, right? So remember, government's borrowing is not just bonds. It's bilateral loans, it's bonds, it's also contingent liabilities, the guarantees that government provides for SOEs. Right? So whereas what we're discussing is specifically around the government's bond issuance program, but one needs to look at government's overall debt, taking into account the SOEs as well. And the debate is really, for us, why aren't we seeing more SOEs come to market? And it goes back to, well, you've got a Minister of Finance who's very happy to finance these SOEs. And so there's really no incentive for them to come to market. What I've always advocated is, maybe what we need to do is we need a change at an institutional level. So have a treasury that is separate from finance and development planning. Let the planners worry about planning, right? And let the treasury worry about balance sheet management. And that will hopefully address some of the issues around how much do we borrow, where do we borrow, what is the cost of that borrowing to government, and can we absorb those costs?
Thank you. Any other thoughts before I close it off? I know we are running out of time.
You also said, and maybe just to reflect on the government's perspective on this, I think as much as we also talk about the borrowing benchmarks for government, we also have to recognize the need to sustain or to have sustainable GDP levels. And where I really see significant opportunity, in addition to the local issuance market for government, is really around a government external issuance. So the government issuing non-domestic debt, also to provide a benchmark for local corporates that also want to borrow internationally. So at the moment, we don't actually have a benchmark for where Botswana corporates could borrow internationally based on the Botswana rating or the Botswana government borrowing level. So I think there is an opportunity there, and there's also a need to also explore different types of bond issuances beyond just the vanilla bonds that we currently do now. There's quite a lot of demand for inflation-linked bonds, and unfortunately for some of these instruments, we need government to be the first mover. So there's quite a lot of demand in this market for inflation-linked bonds. So pension funds, as an example, can match the exposures against the investments, and there's quite a lot of reluctance from government to issue those kind of instruments. But unfortunately, they need to move first before the market can move.
Okay, thank you. Thank you. Is there maybe a burning question, maybe just one question or two from the audience that you'd like to pose to the panelists? Okay. Morning.
I was actually intrigued by Kopane's speech, especially the point where he noted that we saw an increase in investment in bonds, actually even over investment in equities. So the question I wanted to ask was, if you follow modern economics and modern economists, the likes of your Michael O'Sullivan, you find that they've been talking about generally the world is shying away from investment in equities. There's subdued levels of investments in equities, and we're seeing more of a push towards investment in credit and credit instruments. So my question to the panel and to Kopane would be, are we seeing the same thing happening here? Is it becoming a trend, and are we ready for it, if at all it is an opportunity for the bond market?
Right. Okay, I think that would be all in terms of the questions. Kopane, you can address that.
I think it was just one of those rare occurrences where you see historically where bond trading will surpass equity trading. And like I said, it was primarily occurring outside of the BSE, in a market that is a market that involves banks and that is overseen by Bank of Botswana. But in my opinion, equity trading will always exceed, well, in the context of Botswana, equity trading now will exceed bond trading, because the equity market is much larger than the bond market. In other markets, you find that there is that clear trend that bond trading actually exceeds equity trading. And if you look at Nigeria, that happens to be the same situation, simply because bonds in that particular economy are offering higher yields at low relative risk compared to equities. And to add to that, I would expect also retail investors to be more active on bonds than equities, because bonds generally, especially that majority of the bonds we have here are government bonds, they are very safe with relatively low risk. Government will never default compared to the risk that you're exposed to in equities. So those dynamics do exist. We would like to see some of them happening in the country, but it's due to structural impediments like accessibility that possibly retail investors are not so exposed to safer instruments compared to other alternatives on the market.
Thank you. Okay, I think that would be the last question. I know. Okay.
Just a comment. When you listen to the presentation across speakers, you find that everybody touches government. And then I think my son there categorically said, Minister of Finance, all these different portfolios, different responsibilities, they seem they are not well structured in such a way that how far are we pushing government? But when you talk of fragmentation, Bank of Botswana doing that, banks doing that, and then outside the Botswana Stock Exchange, how do we normalize this? Are we creating an environment where we can push as much as possible the impetus for development, so that we can see this market growing to the level that you see we want the market to go to. Because I think we are pushing at a very slow pace, or snail pace. Because if all these obstacles, if all this mismatch, they are really delaying people to participate. I think majority of us in this country, we think bond is outside our business arena. We think bond is for big corporates, for government. As individuals, we don't participate. We don't even know what is a bond. So I would be happy if I told the panelists and the Botswana Stock Exchange as well, you try to engage people in this country. And but we can go into other instruments so that we can better yields. But honestly, PSB. Education. I think you should have to, come up with a very aggressive programs to let people of this country to participate in their economy.
Thank you very much for that. And I think it extends well into what BBMA has been tasked to do, or one of the objectives, which is really to educate, the market and to disseminate information. I know Kapona touched on, there's more information that you can get. It's just a pity that our session is quite short this morning. But the BBMA has launched a website in 2016. You can get more information, about the initiatives and the publication that was launched recently. Kopano, I see there's a question at the back. I know your time. We've been given, a few minutes. So I'm wondering if okay, that would be the last question. All right.
Good morning, everyone. My name is Kopiso Tige, and I just wanted to ask from specifically Kopano, because there's a point in the speech where he mentioned inclusion, and I think it goes back to what the previous speaker was talking about, that there's a lot of people that don't know. I mean, the stock exchange says that they're available, all this information is available on websites, as well as the BBMA. But we all know that your regular Mozano Urwele, for example, like was said, is not going to find themselves or even stumble upon the website of the stock exchange or the Botswana bond market. And then on top of that, when we speak of inclusion, we look at things like the fact that inclusion means financial services that are available for everyone. And then we start saying, okay, who do we need to focus on? That is your marginalized groups, your women and your youth. So all in all, just to keep it short, my question is, how is the BMA including women and youth? So for example, if I am a young Motswana woman and I have a business and I want to get into bonds, I want to maybe invest, I want to start something there, just walk me through how I, as the marginalized group, can be included into this whole arena.
Kopano, she did single you out. I don't know if... or if there's anybody that can take that. Sure.
Thank you very much. I think the first answer to your question is the magazine for this quarter, which talks about financial inclusion. But also to answer your question, one thing that I've got no doubt in my mind that we are doing as the BSE, and we are doing very well, especially for the past few years, is education. I don't want to take all the credit, but I don't think there's any other institution in this country that does as much as we do. We have free open days outside BSE, where we go to outside the country, outside the Gaborone, like 5 times in a year. We've been to Hukul, we've been to Johannesburg, and all these things are done free of charge to the people that we invite. The very same initiative that we have today in the opening bell, it's another reach out activity, and I can tell you we have filled this small room since the inception of the opening bell. Everybody that we do. We have got an award-winning schools competition that was recognized as the best educational initiative in the whole of Africa in 2018 by a London-based organization that we do. And then also, even in terms of women, in the previous years, you will never see 3 women out of 2 men involved in a panel discussion like we have done now. And I have reason to believe that we are seeing a lot of participation of women in the financial sector than men. Opano did the presentation. Ms. Moriba gave you to do the closing remarks. That is what we do as much as possible in terms of outreach activities. And we've got a lot of other initiatives with student-based clubs that are there in tertiary educations, UB Finance Society, also at PHC. We've got a lot of students also coming here to visit the exchange. So I think we are trying our level best. I mean, to move an investor base from about 24,000 in 2014 to about 98,000 now. That's a tremendous increase. We are close to 100,000. When I took over as CEO, our target was to reach 100,000 by 2021, and I'm sure we'll reach that by either this year or before the end of the next year. And if you look at emerging market, the trend is about 5% of the population generally. We are about 5% of the population participating in the stock market. But it is also very difficult if you seem to be the only institution that is actively playing in the role of financial education. I mean, we have pushed government to change the school curriculum. You don't need to be learning about Shaka Zulu and the kind of we need to, because we use atomic bombs and ballistic missiles. The cow formation and the CFI is no longer relevant in the modern day. But that is what you find in the curriculum for Form 5 and for Form 2 social studies. I'm not necessarily saying social studies and history are not important. All what I'm saying is that when I come and teach people about investment and stock exchange, it is very difficult to teach people about investment who don't know about savings. People outdoor don't even know about interest rates. Simple things. And I'm out there trying to teach them about investment. It's very difficult, but I've got no doubt that we have done very well. That is why we are internationally recognized, and we'll still continue to do very well. If you come here next month, it is this bell ringing by senior secondary schools for the competition. And if you really want to see how we do the competition, I mean, I think it's on the 18th of August, 17th of August at Planet Lodge. Come and see how those guys, Travel Lodge, come and see how those young minds are in terms of the book. It's a very interesting competition. It's knockout, it's round robin and then knockout. It's very important. It was won by Lobate Senior Secondary School, I think for the past 2 years. They defended it. But the second school was Nata, followed by Macha. And it's very interesting. Just come and see. I'm not saying we are 100% there in terms of that, but with the little resources that we have, I think we have done our best. I mean, even in Africa, try going to Johannesburg Stock Exchange and ask them if they do outreach activity. And they will ask you what if you smoking. You'll be very surprised because in this country, financial education is still free. But in majority of countries, you pay for financial education. I think I've answered you, but should we have any suggestions whatsoever in terms of what more can we do? Come to the BSC and then just have a conversation in terms of that. But don't tell us about workshops and then ask for them. We have a lot of those requests that people want to run workshops and they want to take money from us. Part of the money goes to preparation is whatnot. So those will. Thank you.
Thank you very much, Retsaole. Well said. That's very well said indeed. I'll just throw in a bit there. The one thing, I don't know if you had actually mentioned that, was, in terms of disseminating information and what the BSC does, a few weeks ago, leading to the BBMA conference, I was I was invited to Radio Botswana by the BSC. I was quite impressed by the way, they know of you very well and your team. And that speaks to the regular engagements that you have with ordinary people, as you've mentioned in terms of your question, around key topics, and just trying to empower our youth. I'd also say it's also sometimes you don't know what you don't know, especially as a young person. I've certainly been there, but it's also to expose yourself. And I'm quite impressed again to see this room is full of young people. And I see other market participants, I see, portfolio managers from other asset managers, also from an asset manager, and, engage with us, ask us questions, and, some of these things, it doesn't really cost you much. And, I can speak for Alan Gray, where I work for, in terms of, what we do around investor education. We train trustees for free. And this is really around, key topics that we know of, basic investment concepts. And, Buiganyo as well could pretty much, mention something similar. So please, by all means, ask the questions. I think we should wrap it up now. We have taken more than what we have been allocated. Thank you very much. Thank you.
Thank you. It's around 10 minutes to 11 o'clock. We are way behind schedule. At this point in time, I'd like to call upon the BSC Head of Market Development, Ms. Thapelo Mribame, who will be closing our our ceremony this morning by delivering the vote of thanks. Please give a round of applause.
Bagaitsu, good morning. Thank you, Khotla, for that kind introduction. As the last speaker, let me just quickly go through the acknowledgements. The CEO of Botswana Stock Exchange, Re Thapelo Tshaola, is here. The Vice Chairperson of the BBMA, Mr. Buikanyo Khosidintsi, fellow speakers and members of the Bond Market Association, Patsimo Ngube, who was moderating this morning, Ms. Ulibile Makupe, Ms. Shakila Khan, BSC management present, key stakeholders within the capital markets ecosystem, business community, members of the media and public. Bagaitsu, good morning. Again, thank you so much for being with us on this cold Thursday morning. I know you could have been elsewhere, but you chose to be with us this morning. So it's really a pleasure for me to give a vote of thanks for this July opening bell ceremony, appropriately themed the importance of the bond market and capital markets. So today's discussions and the program in general has been very full and enlightening, which is something that we always look forward to as the BSE. So I will not go into greater detail as to what was discussed today, but I'll just highlight one or two things that stood out for me. Last week we had a workshop on responsible investing and ESG, and one of the issues that was raised is the fact that, as generally in Botswana, there is that propensity to gravitate towards the silo mentality. So I'm very happy to say that in the capital market space, we do cherish working together, which is something that is highly commendable. So a key takeaways really from today: collaboration is very important, as was demonstrated today by the various speakers. First of all, agreeing to participate in this program and sharing key learnings in terms of the bond market development. And another issue that came out is that we need to lobby as much as possible, because although the bond market is progressing forward, there's still a couple of issues that we are challenged with as a market. So lobbying is very important. So the other thing that came out very clearly is the issue of education. We need to engage one another, educate one another, share information on the bond market or the capital market in general. So that is something that we take very seriously as the Botswana Stock Exchange. And I'm happy to see that everybody else is also very serious about ensuring that there's progress in the market. So with that said, I would just like to encourage all of us to work together, work closely in terms of developing the market, to continue to see each other as partners rather than competitors, and understand the value that each one of us brings to the table. So that is extremely important. So let's not get tired of engaging in dialogue to stimulate the market. Let's keep our stakeholders informed. Let's become strong partners in developing the market and our beloved Botswana. So as in terms of in closing, I'd just like to say thank you to the speakers and the panelists. Surely the insightful presentations have advanced our thinking on the development of the bond market. I also like to say thank you to the attendants, especially for keeping us on our toes in terms of keeping the program interesting at all times. I'd just like to say thank you to the BBMA for agreeing to deliberate on the subject matter for today. And the BBMA is a non-profit organization comprising of market participants. So the fact that you avail your time to share key insights of the market is highly commendable. I would like to say thank you to the media. Thank you for being a channel with which we can share important information. Thank you to the BSE, led by the CEO, Rathole, for his visionary leadership, and management for working tirelessly to ensure that each day we move closer and closer towards our vision. So thank you so much. We have a few developments coming. Towards the end of the year, we are developing an app. We are developing a new website. We are also coming up with a ticker so that we also emulate what is happening in other markets. So Bakaitso, thank you and enjoy the rest of the day.
We've come to the end of our program this morning. While we're outside having refreshments and networking, please keep in mind that our latest edition of the BSE publication is out in the lobby out there. Please grab a copy for yourself, read on it, and of course we do receive feedback. Any feedback that you do have for us is for us to just better improve what we do have over and above the publications, but of course other initiatives that we do drive. Thank you to our panelists this morning for taking the time out of your busy schedules to be here this morning. Thank you to everyone who came here to attend the ceremony. We'll see you all next month. Thank you.